a balanced price. So looking at a balanced price range, what is it? Balanced price range is where an area of price is where we went back and forth, back and forth, back and forth, back and forth, multiple areas. Now, when we come back into the area, well, two things you want to happen. Once, when we leave the area, we should not come back into it. So this meaning this will be a good. This would have been a good sell right here. That would be a good sell. Meaning we came up, we came down, we came up, we came down, we came up, we came down, we went up a little bit more, and we went down a little bit more. You can see in this context right here. Some people, you can view this as original consolidation. This is consolidation. I don't view original consolidation. I mean, it is consolidating here, but I kind of is telling you a story with it, in my opinion. Which is meaning if this is balanced, then once we leave this area of this balanced price range, you don't want us to come back up in here. If we do come back up in here, we're taking liquidity, we're aiming for liquidity. So if you see a balanced price range happening, when we leave it, we shouldn't come back into it. So that means trade like this, leaving here. Let's have a fair gap right there. And let me zoom in, make sure we can all see that. That fair value gap right there. Then looking for sell side, which would be this low right here. And this is what I mean by why I like to see, when you see this area, right? When we come down and take liquidity, when we start shooting back up, coming back into this area, well, this should hold, right? This should bring price lower, right? But as you can see, it's not. In this case, in this context, right, we're using a balanced price range. This can be something you can aim for. I didn't like how we, again, aside from balanced price range real quick, the way we came up, in my opinion, is just not the way that I would like for us to make one more stab lower, showing us that we are finna go back higher. But you can see we just pretty much made one straight up move, which is fine. But the idea is basically targeting that balanced price range, right? Targeting this area, because again, if this is balanced, we shouldn't be back in here. The only other reason we're back in here, if we're going to in here in this price range, in this area of price, is we're taking liquidity. So this would be your buy side liquidity you can aim for. You can go back and look at your charts a lot of times where if you see a balanced price range and we're trading, I want to name it buy side liquidity. We're trading inside or we heading toward, like this right here is heading towards this bullish. I mean, that's bullish, but it's balanced price range. You're gonna see it multiple times where it's like we don't even just stop at balanced price ranges. We literally just targeting liquidity or something above that range of liquidity. And that's what you want us to see is whole price. This would be another example, right? This is be another area of, obviously price is fractal. If we're looking for another area of a swing point of us is going back down, this would be another area for a sell. This is all balance. All this back and forth, back and forth, back and forth. Boom, the first displacement, right? Now this is the case in the context we're using as a breakaway gap, right? Original consolidation, original consolidation, and then just out of nowhere, just explosion of fair value gap, right? This is where you could be looking for entry here, or look for here. Obviously we didn't get to here because this is used as a breakaway gap, but you could use this as on the other side of the curve, bringing that balanced price range, because we got to think about one balanced price range majority of the times is going to be a breaker. I don't know if anybody knows that, but most of the times when you see a balanced price range, it also can be a breaker. So if I went down to 1 minute and start getting fractalized, and I think if I actually go to the 5 minute, you can start seeing this is a breaker on a higher time frame because these wicks obviously are swing points, right? So majority of times, not every time, but I've seen most times it can be viewed as a breaker on a higher time frame, and that all that tells you is once we get above it, below it, right? Balanced price rate. Remember, I told you when we came back into the area, if we just shooting up really, really fast, then we're gonna take liquidity. We took liquidity, right? When we came back below this balanced price range, leaving this balanced price, so we got you probably put everything together. We're leaving a balanced price range, then going down into another balanced price range. So this is now gonna be used. It was used as a bullish one. Now we support price, shot off of it. Now we can use it as a bearish context that once we came above it, we should not get back below it. Why? Because this is balanced. We have no reason to come back down here. The only reason we come back down here is unless we're targeting liquidity. And also in context, we're leaving this balanced price range we just created. So now that we left this, come all right down, sell right here, sell right there, and one more time selling right here. Why? Because we are coming into this balanced price range that we're not coming up. Again, if you zoom out, it'd be a breaker as well. So we're not coming up here. In the context of this, because I got this to use as leverage, this is where you're looking at all this price range and the back and forth that you do not want us to see. Matter of fact, you do want to see this as a breakaway gap. because there's no reason for price to already come back up here. Not only, and this is for context of just looking at the sell side of the curve, you can view this as this is a balanced price range, right? I think this is easier to see in my opinion, right? Because you can see the candles are right next to each other. But if you just kind of like in context, zoom out just a little bit, you can see if we went up and then we went down, right? So you see how this is the same, this is this, but this is just close. These candles are closer. So in context, in theory, again, if we zoom out, price is fractal. If I go to the 4-minute, 5-minute, we start playing with the time frames. This price action from here to this candle is balanced in retrospect, right? Because these candles are went up and now we went down. Then we had up of the curve, and then we had sell side of the curve after taking liquidity. So this is what I'm saying. Like when you start fractalizing at this, the idea of looking at breakaway gaps, looking at balanced price range, you're gonna start seeing that it doesn't view in the same context as in, okay, I'm looking for price to do this. This is what I'm trying to get. This is what the advanced idea of looking at is. I'm not looking at price to do this. It's not needed because we have balanced price range up here, and also we have a balanced price range right here. And also the way what I would have used, me personally, is this right here, because I'm cutting through candles, and this is like I said on the breaker, and this is balanced. We should have stayed above here. We didn't because we took liquidity. After taking liquidity, we came back into this price range again, expecting it to hold, expecting it to go up, and then, or in this case we didn't, so then we got below it, and that's what we're looking for here. So this is a way for like you to start viewing balanced price ranges. They're very useful. Just in context, this would be another one right here. I'm just I don't want to make this video too long, but balanced price range again. This is a balanced price range. We went up, we went down. We went up again, right? So in hindsight, when you think about this, since we went up, we went down, we went up. This right here should hold. This should we should be done with this target. This is get us out of here. Like we should not be here back down here again. The only other reason we would be back down here if we're trying to target another part of liquidity lower. In this case, obviously in the context using this lower. So let's say you got sell side right here. Wherever, sell side right there, and then let's say again, right, higher time frame target. Maybe this is like new week open the gap, something like I said on daily time frame, something like that. We're aiming lower, but the idea is basically once we have this balanced price range, this, and again, the way I'm viewing it, this should do this. You see what I'm saying? We should have been gone because this is balanced. Like, why we even come back down here? The fact that this did not happen right here is telling you like a sign of idea like, okay, wait, that didn't happen. We came back down into this balanced price range again. If I go down to 1 minute, I'm sure this is a breaker. And that's how I like balanced price ranges and breakers. That's why I was like, sometimes usually they are breakers, but let's just view it as a balanced price range. The idea that we came back down into this price area, right? You can see is now we're not reacting and jumping back up. The fact that we're coming back down here, exploding back into this balanced price range, can be an idea, or for a sell idea for you to take a trade like this, take a trade like that, something like that, getting in like that, expecting this balanced price range to stay. We stay below it. Once we notice how we close below it, right? We close below this price range, balanced price range, and we leave it. We're gone because that's all we literally did. Took, quote unquote, we took liquidity, but in my opinion, I want to see this taking a liquidity. I always saw this still in the range of the balanced price range. Came back up, market structure shifted up, and then we should have held this if we was looking bullish. This case, we had some lower targets we wanted to generate. We kind of did generate equal lows right here, and you can see we just literally start shooting lower, lower, and lower. And let's say this is a new week open the gap or something like this. Things that we can aim for lower. Still, that's why it's good to just have context around the trades as well. You're not just going to trade and just blindly trade patterns, I guess in this case, but this is where you can have context and viewing it from a balanced price range / breaker idea of looking at it.